And talk to us a little bit about what's going on with SAB 121. Let's talk accounting details here, because I'm looking at this tweet from Hester Peirce. As I mentioned, she's been nicknamed the crypto mom. She says, bye-bye SAB 121. It's not been fun, SEC.gov. Staff Accounting Bulletin number 122. What's going on here?
Yeah, I mean, as Mike said, that Hester Peirce and Mark Ueda are now two of the three commissioners left in the SEC. There's supposed to be five. We got to wait for Paul Atkins to likely be confirmed. But what SAB 121 did, you could argue maybe the SEC had good intentions. A lot of people in the crypto industry would say they had bad intentions. But what it did is it said that if you hold in crypto, if you're custodying crypto, think big Bank of New York Mellon, they custody $50 trillion in assets. They do not have $50 trillion on the balance sheet. But if you're going to custody crypto, you got to put that as a liability. And that means if you're a bank, they have a lot of regulatory requirements. They have to hold regulatory capital. So like the fees they would earn from custodying those assets do not even come close to offsetting the regulatory costs of like holding assets to offset that. So basically what it did is it functionally made it illegal for TradFi institutions to play in the crypto space and custody crypto assets, despite many of these banks wanting to get involved. They see the money that Coinbase and these other people are making, but getting rid of this means that the TradFi players are going to come in. I also think it's likely going to cause people like Coinbase and Kraken and Gemini. Right now, you have them trading these assets and custodying them. That's not how it works in TradFi. The New York Stock Exchange does not custody your asset. There's other platforms that do it. I think there's going to be separation there. We're already seeing trickle effects, but we're going to see a lot more come down from this repeal.
You know, James, I'd love to bring it into your wheelhouse of ETFs. I've lost track of how many crypto-related ETF applications we've seen. But I'm wondering from your perspective how much the pendulum really has swung as far as these applications landing with the SEC. I mean, can we expect really just a rubber stamp for all of them? Or will there be some pushback about, hey, do we really need a double-levered bonk ETF?
Great call out. That thing was filed yesterday. I mean, so what we're seeing is a bunch of these issuers, particularly issuers that kind of go after the more exotic space of the ETP market, are pushing the limits to see what this SEC is going to allow. And I think it's basically going to be decided by Hester Peirce and that crypto task force about like what rules and regulations are we going to have around assets that can be put in the ETP wrapper. I don't think it's a guarantee these things are going to get approved. I think it's likely that a lot of things are going to get approved, but they're going to draw the line somewhere. I don't know if that's going to be a market cap or how these assets come to market, or who knows exactly what they're going to come up with, but I don't think it's going to be a rubber stamp. All these things just get through automatically. And honestly, I think if that does happen, it might not be a good thing. It might be the pendulum, as you hinted, swinging completely too far to the opposite direction.